And for the activities at the FMDQ OTC fixed income market, let's bring in Samuel Musa, fixed income dealer at Access Bank, to talk to us. Good afternoon, Samuel.
Good afternoon.
So what is the sentiment in the market this first trading day of the week?
I mean, the sentiment in the fixed income market is more on the bearish side. The Treasury bills market opened today with activity still on the short end of the curve. We've seen activity on securities that will mature somewhere between August and October. So we saw a bit of selling on those securities, and then rates went up by an average of about 70 to 80 basis points. And that's because before the commencement of trading activities today, we saw the CBN sending a notice of an OMO auction. So that really spurred the bearish sentiment in the market. For the bonds market, activity has been generally flat. We've not seen so much happen in that space.
Now, in terms of yield, what is the yield trading at currently as compared with the opening yield?
Okay, like I said, on the short tenor Treasury bills, we've seen rates go up by an average of 70 to 80 basis points. Activity on the medium tenor bills has been quite flat, although we just saw a bit of activity on it because there was also another OMO auction on a medium tenor bill on the 2nd of February bill. So we've seen markets sell securities around that same tenor. On the long end as well, that's where we had the initial OMO auction. Market has also been bearish on that. So we've seen rates go up like an average of another 50 to 60 basis points on the long end.
As the week unfolds and the month go by, what are your expectations in terms of liquidity?
Well, we expect liquidity to thin out drastically. The CBN stance seems to be pretty clear to everybody, following the hike in NPR from 12% to 14% last week. So we still see a series of OMO auctions to continue in the market, and that will take out available liquidity in the market. Last week, a total of 216 billion was mopped up, and today alone, with the OMO auctions conducted, we've seen another 170 billion being mopped up in market liquidity.
All right, thank you very much for your time, Samuel.
Thank you.
That was Samuel Musa, fixed income dealer at Access Bank. And Saudi Arabia, the world's largest crude oil exporter, has cut off official selling prices for its crude sales to Asian and the United States clients in August, signaling mounting competition for Nigeria and others. The country's state-owned oil company, Saudi Aramco, lowered the pricing terms for Arab Light sold to Asia by the most in 10 months as refineries grapple with falling margins and oversupply. The company said it will sell cargoes of Arab Light in September at $1.10 a barrel, below Asia's regional benchmark. That is a pricing cut of $1.30 from August, the biggest drop since November. And Libya's UN-backed government has signaled a deal with an armed brigade controlling the major Ras Lanuf and Essaida oil ports to end a blockade and restart exports from the terminals shut down since December 2014. Reopening the ports will be a huge step for the North African state, which since the 2011 fall of Muammar Gaddafi has slipped into chaos that has cut its oil output to less than a quarter of pre-2011 levels of 1.6 million barrels per day. No specific date was set for restarting exports, but swift resumption will be hampered by technical damage from militant attacks and by opposition from the state-run National Oil Corporation, which objected to paying cash to reopen the ports. And that's it on the program. Thank you very much for watching. Do have a good day.